Hello and welcome. This is part 2 in the Dow Jones Industrials and taking a look at how it would perform when a market goes haywire within the strategy on the buy low, sell high that I like to use and I've talked about within this channel. And I'm going to put Dash on the screen for that of showing what it did and within the stock market right now. And I'll go to the Dow in a little bit. But the data amongst this started off with 1,000 US dollars at a Dow Jones price of 58 in 1915, and then buying and selling as markets go up and down. As of where we have left off, the I must have did I save something and put a dot in? I'll watch the end of my video now. And it looks like 157.1. I can just put this on full screen. Yep, 157.1. Problem solution. And you know what? I could have Control Z it the whole time because I was next going to talk about 2669 here as an interesting number. But when it started, okay, so at this time, I would have 10.05 Dow, more basically what I started with, just a fraction of the 0.05 more, 1,000 in fiat cash, and the overall portfolio worth 2,669, which basically is a gain of 2.6 times. And if we take 58.10 divided from the current price, it's up 2.7 times. So as of this moment, as a marginal level as it is, hodling has barely overperformed that of buying in and out. So to think that I will have anywhere near the amount of gains the Dow will have will probably be almost impossible with the volatility going down as little as it's going to be. So anyway, on to this, and we can see just recently, at least on Poloniex, this thing on BTC had one of those moves and went down to 229 handle from the 400 almost. So that was almost half off for anyone who had the buy orders hit. I mean, that's a free hit, basically, a free score. Because then you can just place your buy orders back. And in cases here, if you had your buy order in at, say, 35, oh, okay, I'll sell, I'll put it back. Oh, I did it again, I'll sell it again. And then you would have got it naturally again in here, and so on and so forth. But with this market, what it had was phenomenal gains of astronomical portions on multiple times. And in this case here, this is a spot where you see it go from 001 up to, well, 0.11. Maybe this isn't the greatest of charts. Where in this case, we can take a look at PivX, which before this got going was at like 800 Satoshi, and then up to 2,000 and all this stuff. And it goes from 4,000 up to 150,000. These are the type of markets I'm trying to talk about for protecting yourself. But you can see, since this point, the choppy action has involved profitable trading throughout the entire long term, and all of the sales that have been made on the way up are still ready to buy on any of these pierces where it hasn't seen action, if it even goes there. So that's the whole purpose. Now let's find the Dow on here. And we were doing the 3-day chart. Last touched 1936, 325 is where we're going to go. So I can delete that. Go to the 3-day and then scroll back to that time frame. And this is where it stands. So I haven't moved this sell order back down yet. which is going to be done. Let's move them a little bit higher. Although these are never going to really hit anyway. And continue on playing the game, 125.25. And we're playing for a 20% decline as 1 indicates buy. This indicates the price of it. And last time it was I'm going to reduce the font of this just a little bit. The last purchase was 290.2 that we got back. Buying 2 is 250-ish. 250 as we can see. 2.1. We could even maybe consider 2.25. And we can. So in this case, you'd profit about $7. $8 close to, a little under $7.96. And 0.4 of the Dow. And let's sell this back up below the previous high. And then go through multiple years again without a trade. In situations like this, if you go through long periods, you can always reduce volatility. But for this example, I don't want to because of the pure mathematical of the numbers game when you're trading cryptos. Usually these large run-ups like we've seen in the PIVX, and even when Dash had its run-up, it does it so fast and so furious kind of deal, 179.28, that I want to have these higher percentage moves and also make the end of this video a little faster. So we could do here, we have total of 12.3, a gain of 43%. That's pretty large. If we sell all but a quarter of what we had, that would work out to 358, which is significantly larger than it was before. But it's still, from buyback to sale, a gain of 0.25. So now looking at this market, we can see that our sell order next is a little too close. Maybe put a buy order here at this previous level, increase this one a little bit, maybe towards these lows. And of course these ones aren't going to hit, I don't think. So therefore, let's just increase this each a little bit one by one. Or maybe sacrifice one for a higher move. So maybe next sell up at this level here. And then this one is okay, so now we're good to go. Continue on forward. And there's a 234.44 sale. And in this case, it's good to reduce sale number size here, go decently under 2. For a 30% gain and owning 10.3 at this stage, if you sell 3 of 13th of your portfolio, that would be noticeably less than 25%, like 2.5. So even 2 is just barely under 20%. So I want to ensure that I get a good, decent sale, but it's still enough where it's lower than that percentage. I don't want to sell anywhere close to 3 out of 13th, basically 0.22-ish or 22%-ish area. So therefore now 1,575 in cash, 8.5 of the Dow, and a portfolio worth 3,580. So again, let's move some of the orders down a bit. And go to the next transaction, and it looks like it's a sell, yep, at 301.87. And we're getting another 28% move. Last time 1.75 got us 400. What would 1.5 get us? 452. So there's nothing wrong with putting additional cell numbers in that make this number go lower, yet this number here become higher. So now the ownership is 7 of the Dow, and a net portfolio is practically even down the middle. You got but your cash and your Dow value are both worth over $2,000 at this time frame. So then let's place another buy order down below. And the market just keeps soaring. 427.96. Like I've stated at the end of this last video, there's going to be a lot of sell orders, not too many buy orders coming. And this is for a gain of over 40% now. So this is where you'd want to sell just to keep it at same value from last trade. 4 out of 14-ish. And that's because a portfolio would go from 10 to 14, increase of 4, so 28%. And when you're owning 7, that means we want to be significantly lower than 2 now. So we've been staying that way. And if you go a full quarter, would that be enough that we're going to profit more than 452? Oh yeah. So, and here we're going to notice we had 17 of these Dows back at its low. It's down to 5. This thing could be in decimals, possibly, as we move into the tens of thousands. We also got 4 sell orders in a row. And therefore, if you get the buybacks, that'll be good. But until then, you're going to have a large declining amount of your base currency, but there are not base currency, your traded currency, but they're worth a lot more. So that's just should go without saying for why having less is not a bad thing. So let's bring this say down to here. And notice that you missed a transaction, but we got to get at 535.29. This is a gain of 25%. So that means a portfolio would go from 1 unit to 1.25. 0.25 into a 1 1/4 is 20%. So that would be basically like 1.6. And we're going to take a look at what 1 does. Last time we cashed 534, so now maybe 1.1. Get a little bit more in 587. Still holding 4.7. Net portfolio value is 5,600. And now we have entered 5 sell orders in a row. Put this back to the support level in which it came from. Execute the 644.82 for a 6th sell order. Gain is relatively moderate, so you could even think about going under 1 in a situation. In fact, you'd want to go 1/6 because of the 20% gain. 2 into 12, which is 18%, or 16% rather. Don't usually make that quick mistake, but that's why I like to use a calculator. And if I multiply that by 4.7, 7.8 is where I need to go. So to take a very drastic turn lower here, and maybe the oversell of 1 was definitely a mistake in here. But you know what though, when you trade and you do that at times, you're just going to let it play through. And I want to do it this way too as well, because I want to see how well this does for just when you check the market every so often, and when times get really good, maybe you can make changes. But when you're just waiting for buy order statuses to come in, then you should be doing relatively well long term by playing strategies within this nature. This is a deep pullback, but now I want to bring this down just a little bit here. Let's go like that. And we're going to be entering the $1,000 big resistance. But before we do, and there's an unfortunate miss. A lot of missed trade opportunities, definitely in here. Okay, let's just get real here. Where are my sell orders? What was the last trade? Okay, let's get 838.52. Let's just say you slacked off for a while, you didn't have orders. This can happen to people. And then, oh, you're going to now sell at 838.52. It's a gain of 30%. If we sell a half, that would be 1/8 or 12% of what we got. So put that sale in. And increase this buy order here. Place the sell order, say, or buy order rather, back here, and put a sell order, say, at up here. And from 928, let's go 1200 and change. Although I know that's not going to hit for a while. Okay, 928.78 hit. Now in this case, it's only a 10% gain. So selling 10% is pretty much around the key. That's 0.36. So if you're ever in a situation here, if you're playing within this, if you short sell in the sense of selling lower, then that's what you would have to take. Put a buyback down, say around here. And obviously I knew it went to 1,000. That's where I could have obviously put my sell order. And I would put it probably around 970, 980 next, because I just bought here at 787. And from this point on, I'm going to round the numbers down to whatever they are, and just I don't need decimals anymore. Okay, so finally a buyback after about 8 or 9 consecutive sells in a row, and seeing the portfolio of Dows go down from 16 to 3, as you would expect. The last sale was $278 for 0.3. And that would cost even more. So all we can buy back is a 0.35 here. And then you'd place your sell order, say 973. You'd miss it there. You'd hit it there. And in a case like this, we sold that area of 0.3 before. We bought 3.5, so we're just going to pocket the 0.05 at this stage. And then we look at a buyback. Where's the key area? And just get one in here, I guess. That's probably the safest play. And then I want to bring this up just a bit too. I don't think it goes there, but maybe it did. I know the scale is $1,000 resistance. Okay, obviously that buy order would go up higher. 820 or 872 is the number here. And in this case, the sale last time was for 2, and this is a better gain than last time. So 0.4 would cost 349, which is much higher than the okay, we'll spend a little bit more, but the weren't able to, you had to pay a small fraction more because it cost us 305 after getting 291, but it's only a 10% decline. But when you have all this amount of cash, you kind of can afford to do so, but you need that cash for the major retracements that can occur as well too, though. So this would go back to the previous high there. Okay, 739 was the buy. I see 738.78, so 739 is a hit for a buy order fill. And this is a double buy hit, so we're basically getting this one back right here for $418.63 and 0.5. So point, say 6 would cost 444, which is a little bit more. So if we go 5.5, that would work out to less, and now bringing it back up to 4.25 from a low of 3.3 for the amount of, well, in this case, Dow. So let's sell this up again. Maybe previous resistance here. Missed the buy at 622, but we got the sale at 861. And this is a gain of 16%. And when you're playing in a choppy market, then and the moves that you had with all the selling is over, then you got to reduce your volatility to amongst such. That's so 0. This is a gain of 16%. So if you wanted to see what the fair number would be, after all, we were in accumulation phase, it kind of might be nice sometimes to even sell a 0.3 spot here and hold a lot more. Find out what the number is. We have 16.15%. So that means you would have a portfolio that, if it were to gain such, and it's going to be 116. So 16 divided by 116 is 13.8%-ish. Multiply that by the amount that we own, which is 4.25. 5.8 is what you'd want to sell. So let's do a 0.4 spot, noticeably lower than that one, and get 343 on the trade. And then let's just check to see where this buy order missed. Let's put this up here and this down here. Maybe it's a little too greedy going the lower end of that range, but it does make for better mathematical trades to get, well, buy lower, obviously. Oh, does a 967 miss? Well, let's just lower it here just in case. Okay, 950 sell. And a situation for only a 10% gain. So well under 10% is 0.38. So I'm going to go 0.3. And look for the buyback, say, roughly here. And you know what? If you were to bet where, I mean, this support hit the previous resistance from here to here, right on the T. That if I was to play conservative, I really would have went around 784. I would have missed it so much more on a conservative order. But I'm just going to reduce this a hair here, just to separate the two other buy orders. And it gets over 1,000 here, but brings a lot of choppy movements. Again, you're just missing your buy order before a good rally. Kind of annoying, 848, because you missed, there's a spot where you can get like a quick trade. But 848 will take the buy at. And the situation here, it's obviously going to be greater than 0.3, but 10%, you're probably going to only want to do about a 0.33 spot, basically spending what you'd sold before. And then as far as where to put the sell order, this has been major resistance near this 9 under 1,000 level. And there's a 630 buy, so 2 buy orders in a row now. And this one's a very good one, being 25% down compared to all the other ones from before. So in a case here, we're in a spot where if we're losing 25%, 100 becomes 75. And if you think about that for a little bit, that means you would almost need to buy a quarter of what you own just to get close to that level. And when you have retracements like this, you say to yourself, I got 3,884 accumulating really high. But I have to be aware of prices going to 500, 400, 300, 200, which they don't, but you still have to be aware of that. So if I bought one full one, it would cost me, say, $630. How many of these $630 can I afford from this point on? 5, which means you leave yourself chances to allocate deep buy orders at these stages. So that's what we're going to do, is buy the full one here, and I'm just going to go 1.02 just to put it back to a more even number. And then if you get like further large declines, then you would buy more that way. But I know, of course, the market is going to have some obviously up moves. So let's move this high up closer to here. Move this, say, up to here. And this one up to about here. You know what? Let's do this. And then put this up top. So 11 to 14, that represents an okay move, and 14 to 1942. Okay, so there's a sell at 820. A sale of 30%. So therefore, sell maybe 0.4, which would be 10%. And when you're selling for a 30% gain, well, that means you're selling well less than what I would need to, which would normally be close to, well, 3 into 13, or less than 1/4. So let's put the buy order back in. So we may have went a little too high on the 1,000, didn't quite get the sell order, which meant when you miss it, that means you're going to miss some of the buybacks, which is the case here. We are about to leave this range here, although you really can't know that at the time. And a lot of missed opportunities here. A lot of these missed opportunities. We're selling for smaller percentage moves. It would really take me a freakishly long time to do such. But again, as I'm stating, in cryptos, I'm not going to be really worrying too much about 9, 10, 12, 14, like 10% moves as much when you have the wild plays. And I'm trying to protect myself from getting the best possible profits from the 5,000% type moves. And in this case here, 1119, let's do that less, 36%. I can most certainly just reduce it by the 0.05, because 3.5 on this is still less than 10% of your holdings. But you're now in a position where market conditions are showing a lot of scary dynamics in which they, scary dynamics is in the range would be over, given how you can see it's been holding and staying above for quite some time. Just in here, it's changing the market direction. And where's my sell order here? I think I moved up accidentally. Why did I sell so north of that previous high? And 19 and 2000 together doesn't make any sense. So let's go here, 15, and then here. And quite frankly, we could just do something like this. Because we know these buy orders are never going to be executed again. Okay. So there's a 1502 sale. And within this here, 0.3, 450 is higher than 391. So I'm selling less Dow for more dollars each time. That's fine. Place a buy order back. Even a little lower. 22.28. And this is for about a 50% gain. And on a 50% gain, selling 1/3 of your position would normally be what you want to do here. But I'm going to keep this at 0.3. Normally, like I said, want to decrease it. But because the percentage gain is so much higher than the last time, being closer to 50% rather than 33. So let's place another buy order in. Oh, I mean, again? Really? I don't even profit the 87 crash. Okay, I may be doing this too fast. But that's going to be the reality of the game in real life, is that you're going to miss orders like this. Maybe not as unlucky as this, although I'm used to this at different times as well. 32.70 sale. Now, generally speaking, this is an area where you'd be expecting for there to be heavy resistance. But there never turned out to be too much. As it kept going higher and higher, there's a sell at 46.82. And within such, yet another gain of over 40%. Not quite close to the 50% number anymore, but still a decent size gain nonetheless. And 0.3 still represents that of 10%, which is much lower than what is required in this case. But the accumulation phase has now managed to bring in that of what would be 7,500 of the base currency, or 7.5 times for more what you started. That in itself is phenomenal. So let's bring this down to this level and watch it sell some more at 70.95. And when markets are moving like this, then you want to play the volatility, and straight up moves means that you go from 20 or 30%, 18% moves to the 40, 50% moves, because the market's allowing you to get such. So 50% again, I could sell 1, but I'm going to go 0.3 again, which means another 2,000 is added, 9,500 in base currency. And you're just going to wonder, when is this going to stop going up? Because this is insane. And well, I know I missed this sale. I could have purposely got it. But this will make me end the video earlier, I guess. Okay, so here we are. 12,196 is a sell order. Now we have a 71% gain. In this case, maybe we're going to just do that little bit more. 0.4, which is still like 20-ish%. And if you sell 7 into 17, that's 40%. When you're getting a 70% gain that you would. So in a case like this, you could sell even one full unit in this case. And you're also at the points where you can just start aggressively selling so large in the idea. I mean, it just got to go down at some point, doesn't it? So back to where it came from here. And I guess maybe I'm just going to be nice and be lucky one time because I've been so unlucky for so long. I know that's cheating, but I don't care. And actually, in reality, let's just face it, I'd be spending more time equating into buy and sell orders so I don't go long periods of time missing out on the up and down choppy action. So that you can see as one, what would be a mistake then. So there's the 98.92. And last time it was 0.4. If I bought a half, would I be able to do so for less than 48.71? Close enough. So then in here, back above there, and there's the bottom of 68.34. This would be a decline of 30%. So from this order here, which got me 21.25 at 0.3, if I buy another half again, it would be significantly more expensive. So we'll just do the 0.35 level. Although I'd be smart just to go all in, but if you knew the future at this point, then it would be so easy to play. And then you really wouldn't need, of course, to you just hit the tops and bottoms every time. It would just be too easy. And then, of course, after hitting this, without looking at what happens, you'd want another level in here somewhere. Of course, there it comes there at 94.78. And in here we can sell the 0.3, which means you're keeping 0.05 held back, but we're done only 2.8 of the actual down. We're basically going to start a nice bull market to current price point. So then I'm going to put this back down to where I know it's not going to go. And then wait for 13 to hit right now. 13.868. And we're talking half the stack from a purchase of 0.5. So you keep it at 0.3. You still get a very good sell of 4,154. Put a buy order, say, in here. And then watch the market go. There's a 20,000 sale in place. And I'm probably just going to... Well, I'll just put a 26,000 in to end it. So 20,000 and 26,000. So in this case, keeping the 0.3 numbers active because they represent originally that of about 10%. And when you're selling for 40% moves, selling a third is much higher of a number than 0.3. And even here at 2.2, 3 into 13 is 23%. multiply what they had before, which was 2.2, that's 0.5. So I'm definitely selling much less. So at this 26,000 price point, this would mean increasing a portfolio 77 times its value. When I'm looking at 77,000, to have 27,000 in cash. But what's wrong with having a 77x gain when you're trading the crypto market? And remember, there was a lot of lazy trading in this video. But for me to try to really see how well I could do, it would take decent amount of time either to turn this into like a 5, 6, 8 hour project, or write a computer program script on a spreadsheet, which I could technically do because I got access to the daily data going back to around 1920 in itself as it is on the daily term time frame. So therefore, it's something I could do, but like I mentioned, there's going to be the real world of cryptos where you're probably going to be looking for 30, 40, 50% moves sale after sale when you have a situation of a market going from like straight up from 630 Satoshi as an example up to 12,000. A 20x gain, maybe it happens over a 5-week period or a 7-week period. And then in the real world, and when I say the real world, I mean the crypto world, which is interesting. I use the word real world for that now because it's almost become my world, that you're going to have these magnificent price retracements to the downside, where if something goes like from under 1,000 Satoshi to 26,000, then don't be surprised to see it pull back to 3,000 or 4,000 Satoshi later in the future, which will definitely bring amazing buyback opportunities for having your portfolio go from basically 17 of these things, almost 18, down to 1.9. And I could have been more aggressive with my sales, and I could even change some mathematical formulas, but I'm basically just showing the whole situation that if a market goes straight up, you're going to almost always underperform the baseline currency simply by holding it. But when you get situations of a good up and down choppy action, that could change relatively fast because, as I mentioned, in a bear market that goes like this, you can oftentimes profit on something like this because of the up and down swings that present itself compared to the straight down markets. And the same could be true in spots where you have the same up and down choppy market, where you just have moves like this happen over and over, that you could actually outperform the amazing gains. Say if this is, say, 100 Satoshi and this is 10,000, then if you have enough of these moves that you could actually do better than a 100x move, which is what 100 to 10,000 would be. And of course, when markets go sideways, you're going to profit as well. That's the whole point of I like in this type of strategy, where you just wait for buy orders to fill and sell orders to fill as well. But when you're showing examples like this, lazy trading is an excuse when you're just trying to find base general results, see how different things would work out. And in the crypto trading world, you have more time to look at different situations, to analyze the message of the market, and then just adjust to the situation accordingly. Thank you for tuning in to this video. I hope this has been informative, helpful, entertaining, although I don't know how it would be too much on that structure. And have yourself a great day. Bye-bye.